Okay, so hi, it's Deborah. I'm here with Jennifer Alvarez from Embrace Home Loans. Very excited that she's going to spend some time with me today because it's come to my attention that a lot of people have a lot of questions and a lot of people have misinformation. Do you want to say hello?
Hi, I'm Jennifer Alvarez with Embrace Home Loans, and I've been in the mortgage industry for 30 years, so I'm ready to answer all the questions.
And maybe the best thing that we could do to get started is for you to just give kind of a general overview of what happens in the mortgage process, because to me, that's the biggest misinformation that we have.
So step one would be to reach out to your loan officer. Me would be the best one to reach out to, but you want to reach out to your loan officer. We're going to ask you a lot of questions. There may be some things that are a little more personal than what your real estate agent will ask you. But we're going to be asking about your finances, which direction you want to go. We're going to be collecting a lot of information up front, but that is definitely step one. Step two is giving us that information. Your loan officer paints the picture for that scary underwriting process that everybody is afraid of.
So what kind of information will you be asking from them? So like what should they prepare before they even get a hold of you so that is ready and they can get the house of their dreams instead of digging up that paperwork later?
So you should definitely keep your pay stubs, W-2s, bank statements on hand. We generally are going to ask for 2 years of W-2s, 30 days of pay stubs, and 2 months of bank statements. So if you're looking to purchase a house, start saving them now. We could ask for more, have it on hand and ready. If you're self-employed, we're going to be asking for your tax returns.
And somebody just asked me the other day, why are you sending me to a mortgage company? And I said, well, they have the biggest variety of types of loans.
We do.
And so what kind of loans do you have? I mean, I know that there's people who have special needs, like if you're buying a home for the first time, or
Correct.
One of the things that keeps happening that I notice is people who are buying a home for the last time. All of a sudden you're on your pension and Social Security income. How you make a purchase might be different there.
Correct.
So could you kind of compare those two scenarios?
Sure. So if you're retiring and you have pension, we do those as well. People call that a fixed income, but you still may qualify. We're going to ask you for the same type of information. It just looks a little bit different on paper. Instead of W-2s, we're going to ask for 1099-Rs. That's what you receive when you get Social Security, pension, statements like that. It shows on your bank statements. So just because you're retired doesn't mean you can't buy a home.
Okay, and if my wrinkles don't show it, I'm pretty darn old. My first house, everyone was required to put 20% down. Is that still the case?
That is not the case. You can do as little as 3.5% down. If you want to do 5% down, you could do that as well. 20% down would be the way you would eliminate private mortgage insurance. You'll hear the acronym PMI. Most people don't know the acronyms when they're buying a house, but that's what that stands for. So first-time home buyers can do as little as 3.5%, 5%, 10%, 15%, 20%. Your 20% down comes into play when you're doing an investment property or a second home, vacation home. But other than that, the down payments are fairly low.
Okay, now you talked a little bit about PMI. How does that actually affect the process?
So it does add on to your payment. So it's an additional coverage. So you're putting 5% down, right? So you have this additional insurance. Say you should default on the payment. This covers the lender. It doesn't cover the buyer. It does cover the lender because putting less than 20% down is a higher risk. But that's what most first-time home buyers do. It's not a very big amount. So
Okay.
It does go into the monthly payment.
And does that stay in there for the extent of the loan, or is there a way to get that off once you own more of your house?
There is a way to get it off on a conventional Fannie Mae loan. When you hit that 20% mark, it falls off automatically. FHA loans, it is on there for the life of the loan.
Okay, so if I were to refinance or something like that?
Then you can remove it. Refinances will take it. Selling it, all of that.
And could I come back to you for that refinance then?
Absolutely. And we discount people when they come back to us and get, you don't pay all the fees that you would on a purchase when you come back to me.
Well, that's good to know.
Yeah.
That's interesting. What are some of the biggest myths that people come to you thinking?
The biggest myth is the 20% down. People think they need 20% down to purchase a home, and you don't. The other myth is credit score situations. So doing a government loan, which is FHA, you can go down to 580. But, the importance of a credit score is you want to be in that 620 and up. It gives you a better rate, but you can get a mortgage with a lower credit score. And I think most people think, oh my gosh, I'm just 600. I'm not going to be able to get a house. You can.
And if you have that good credit score, a lot of people have come to me lately that are in business for themselves. And my understanding is that's a slightly different kind of loan? Or?
It could be, yes. So let's go back to the bank versus a mortgage lender. So when you go with a bank, they're pretty standard. They want to do the regular, conventional, full documentation loans. When you deal with a mortgage company, we generally don't have any overlays that the bank does, and we do out-of-the-box loans. So if you're self-employed, and like every self-employed person, you're going to claim less income because you don't want to pay the IRS, right? Am I right?
Well, or you didn't actually earn it because you did have those costs.
So we come in with maybe a bank statement loan. It could be your personal bank statements or business, and we will work off of your deposits. So if you're writing off a lot of business expenses, but you show deposits on your bank statements, we can do that kind of loan for those are for self-employed people.
Okay, so now that those deposits should be consistent.
They should be consistent. Sometimes you'll see like people in the car industry sometimes get bigger deposits here and there. If it looks odd, we just ask for an explanation.
So like after other people's tax time, like for us in the real estate business, there are definitely times of year that are busier.
Correct.
So maybe would you go back a couple of years to give me a better rate, or?
You can do 1 year or 2 year. 2 year is the max. So what we normally do is I would collect 2 years anyways and see what math comes out better in your favor.
Right, because you're creating that really good package for me for underwriting.
That is correct.
My
goal is to get you to the closing table.
Another thing I get calls about all the time is the debt to income ratio, because they don't understand how that works.
I do explain that to my customers, and I tell them how to do the calculation. It's basically the debt to income calculation is all the debt that you currently have plus what your new house payment is divided by your income. And that's how you figure it out. And when I work with people, I actually tell them how we do it. And I give them a little spreadsheet so they could play around with the numbers. And it does vary on what you can do depending on what type of loan. I have closed loans up to a 60% debt to income ratio on a VA loan.
Oh, wow.
I know it's not very often, but it does happen.
But there is a magic number that this is how much debt you can be in altogether, and then this is how much for a house.
I don't know if there's a magic number anymore because everything is done through a robot. Everything is automated. It's an automated underwriting system that we use. So when we do the pre-approval, we're running it through an automated underwriting system. And the automated underwriting system is going to tell us, if your debt to income ratio is 50%, but it approves it, we go with it. I mean, the magic number used to be 28 on the top, 36 on the bottom, but it just doesn't work like that anymore.
See, there's my age again. Another real popular question, because people are trying to determine whether or not they're going to buy points. I had to laugh because where the interest rates are right now, in 2000, when they dropped to this level, everybody went crazy and bought a bunch of houses. And now people are acting like this is enormous because of how long it was way below,
They were spoiled at the 3%.
Yes. So people keep asking me, at what point would it be worth my while to buy points? Like if they're only going to be in the house for 5 years, is it worth their while to buy points, or should they be in longer?
I would say if you're going to be in that house for 5 years, which is generally 5 to 7 years is the average people stay there, I wouldn't pay more than 1 point. You have to remember we're in a higher rate time, but 6 months you can refinance when the rates go down, and we do keep track of that. So I keep track of my customers, hey, we closed you at 7. Now the rates are down to 5. Let's do something.
Oh, so you'll give them a call.
Absolutely.
Hi, this is Jennifer. Let's fix that rate of yours.
But I think people should also know that your credit card debt, I've done a lot of refinances this year to help people pay their debt down. The average interest rate on credit cards right now is 25%.
Oh my goodness. So you also do, like if I'm already in my pre-existing home, you do something for me there.
Correct. you can use your equity. So 7% is lower than 25 or 26%. So if you have a credit card and you're paying your minimum payment at 25%, you're never going to pay that off.
No, of course not. Well, and I guess that takes me to my next question. I was going to ask you about what kind of shifts are happening in the market that benefit both buyers and sellers, because like we see a lot of sellers nervous to sell because they don't want to attach themselves to that. Like for their tax situation, they have portability they can bring with us. Is there anything like that they can bring in the mortgage world?
Not really. I mean, that's a full-on tax thing. I mean, if you're a disabled veteran, though, I mean, this is really cool. So if you're a veteran, disabled veteran, you're buying a home, you're going to get your homestead exemption, correct? All the first-time home buyers, or you're first buying a home here in Florida, if you're a disabled veteran, you also get an exemption because of your disability. And we're actually able to qualify people without the taxes. They're only going to pay not ad valorem taxes.
Very nice.
Which could be, I don't know, $20 a year. So it does help in qualifying, and that's strictly for disabled veterans. So we cater to them a lot.
Yeah, and the VA program itself is pretty good.
It is very good. Yes, 100% financing. It's one of the few programs that has 100% financing.
And that's, I guess, another question I was going to ask you, because with prices changing, a lot of kids have the income to get in a house, but they don't have the down. When it comes to gifts and things like that, I know there used to be a whole bunch of rules about what you could get as a gift and what you can use. Can you talk about it?
Sure.
I gift my kids a certain amount of money? Is that still good?
Well, we're not the IRS, so we're not tracking that for you, because a lot of people think, oh my gosh, am I going to get hit with taxes? We're not reporting it. That's not what our job is. That's your job to report it. But there is no limit on a gift. You can give as much of a gift as you want. I've had people get $5,000, $20,000, $100,000. It's just a matter of paperwork, and we will walk you through that. It's really not that difficult. There's also down payment assistance. We have several programs.
Could you touch on those a little bit?
Sure. Through Florida Finance and Housing, the Hometown Heroes has no more funds, but we're still giving the $10,000. There's also a community housing initiative through Brevard County. People qualify with us and them. They can get up to, I've seen $30,000.
Oh, wow.
So we have several down payment assistance programs, probably about 4.
Through this, like with Hometown Heroes, I know that sits as a second
It is
mortgage,
a silent second.
And with no interest, and if you refinance or pay off the house, it goes away. Now, that other down payment assistance, is that
works the same?
Okay.
But the limit is $10,000. With Hometown Heroes, you were able to get up to 5% of your sales price. This one is $10,000 flat fee.
So a few minutes ago, we talked a little, just briefly, on second homes and investors. You mentioned that. Correct. And so maybe we have so many people coming from out of state. Now their banks can't cover they don't do out of state loans.
Some do, some don't.
So somebody comes down here from another state and they want to make a purchase with you. Does it work the same as with anyone else?
It really does. I mean, it's basically the same kind of loan application we're doing. The only thing that's different is if they're buying a second home, they're going to qualify with their current home and the new home in that debt to income ratio.
Okay.
And we handle all of that. I mean, your upfront person, your loan officer, is going to qualify you before you get any further. At least that's how I work. You're going to know within 24 hours whether you're going to qualify for that home. I give people options if we're on the edge of something, like, hey, maybe we can pay off this credit card, just this one, and then you'll qualify for what we need. So there's all kinds of things that I do to help people get into their homes.
And what's the difference between it being my second home or an investment? Like people want to come down. We have a client that's coming down soon because they want to be able to use it as an Airbnb when they're not here. So that's definitely an investment property if they're doing that?
That's considered investment. So a second home in the mortgage world is considered a home that you're going to occupy at least 6 months out of the year.
Okay.
Investment is what you're going to make a profit on. So Airbnb, if you have long-term rentals, that's considered investment property.
So if I bought a property and I knew that I was only going to be in there 3 or 4 months out of the year, it still would be considered an investment?
It would be considered a vacation home.
Okay.
Still, I mean, that's just the rules that are in writing, but not everybody can come down for 6 months at a time.
And so would it be a different type of loan then?
It's still the same kind of loan. It's just qualified a little bit different. On a second home, you could put as little as 10% down. Investment properties is 20% down minimum. Okay. So you have a little bit leeway. They consider it almost like a primary residence because you are going to occupy it part of the year.
Yeah.
Or investment, you're never going to occupy that home.
And another popular loan that keeps happening around here, we have a whole bunch of manufactured housing.
Yeah.
And so do you have any programs that can help out somebody with manufactured housing?
We do. We do it conventional, FHA, and VA. So we have all those programs. The thing that I see on manufactured homes is the rate may be a little bit higher. They consider it a little bit of a bigger risk because it doesn't have a foundation. And, you just have to shop your insurance on something like that. But we do them. I mean, they're all different. You could still do 100% down on VA, 5% down on conventional, and 3.5% down on FHA.
And would it be the same if it was a tiny home? We now have like 3 tiny home villages.
Like tiny home, like you see on TV?
Yeah, because there's still like $100,000. For most people, they can't cash out $100,000 for their little tiny home.
I've never financed a tiny home, but I do know that in the guidelines, you have to have at least like 950 square feet.
Oh, okay. That's good to know.
Yeah.
See, you're busting myths for me now.
How many square feet is a tiny home?
I think they have to be less than 600.
Okay.
But I wonder if you could add layers to a tiny home and qualify that as a square footage.
I don't see why not. As long as it's hitting that 900 and whatever I said. I can't even remember what I said it was now. What is it? 950. Yes.
950 square feet. Okay.
Yep.
Yeah, it's a tiny mansion.
Yeah.
Well, how about condos and stuff like that don't have 900 square feet?
If they don't have that, I think that's going to be a little different financing. It's just in the guideline. I've never gone off of it. So I've never had one that small. I mean, I could always find out. If we ever do a Q&A again, I can have that answer. I just don't have it right now.
Well, and talking about condos, I've seen that there's some programs that don't agree with condos or the associations. I still don't understand that.
It is a little different. There's a little more paperwork involved. Ever since that condo collapse in Miami, it's a little bit tougher. They've got to get a lot of engineering reports. Insurance is a little bit rough, but it does work same as a regular loan. You're just going to have to get a little bit more paperwork. Stuff from the condo association, condo docs. Sometimes we get them from the title company. Sometimes the HOAs aren't really willing to help.
Yeah, sometimes you have to arm wrestle the HOA.
We do. Sometimes they charge for it. But our goal is when somebody's buying a condo and it's, say, not on, there's a list that Fannie Mae, FHA, and VA have. If it's not on the list anywhere, we'll see if we can get it approved. We will test it out for you to see before you get into contract.
Well, and there's been so many new requirements since that collapse. That I see a lot of those condo rates going up.
The insurance rates or the HOA fees?
The HOA fees.
Yeah, to cover the insurance.
To cover the insurance and to also make some of the improvements that needed to take place for it to get a quality insurance, or to pass any of the new state laws. So how does that work? Does that work like a payment when you get a mortgage?
It doesn't get paid in your mortgage. However, we do put it into your debt to income ratio, but that's something you're going to pay the HOA separately. We just consider it and you're qualifying.
So before we close this up, I think one of the most important things you can do is give us a list of things that we should not do.
I'm glad you said that because I do give out a list of these things to my customers, but let's touch on that. So one thing you don't want to do when you're applying for a mortgage is move your money around. We're going to be asking for those bank statements, and the biggest thing in underwriting is they're going to ask, like, if your deposit on your bank statement is over a certain amount of your income, they want to know. You have to document where it came from. So
how far back do you go for that?
Just 2 months.
Okay.
Just 2 months, 60 days. So
if you're moving money, do it 3 months before.
Right. Or if there is money that you have to move or you're making a deposit, tell your loan officer, because I'm going to tell you what you need to do to get around it. You might have to wait, deposit your money, then wait till the next month to give me your bank statement. So we will guide you through that. The other thing you don't want to do is go out and buy in the middle of the loan process like $50,000 worth of furniture. Wait. You do not want to open any credit. You don't want to use your credit card. If an emergency comes up where you have to, like I've had somebody who was in a car accident or something like that, just call me and we'll make sure that it works. One of the biggest things that used to happen, but I teach my clients what not to do, is people would go and buy that furniture, and when you're doing mortgages, a couple days before closing, they do a soft credit pull to see if you have opened any credit or anything like that. So I let all my people know, don't rack up that debt until you're done. And I will tell you the exact moment you can hit that button and buy those furniture.
Yeah, we have clients that wound up getting to a very, very lovely home because the person that was under contract for that very, very lovely home decided to buy a vehicle. Yeah.
I had a customer buy a Maserati 2 weeks before closing and sent me a picture via text, and I about had a heart attack. Lucky for him, he was still able to qualify, but you definitely want to avoid that because you can live in a house, but you can't live in your car, or maybe you can, but that's only if you're homeless.
Living in a Maserati would be a little cramped.
Yeah, where would you put your laundry?
Trunk.
Right. Oh, do they have one?
No. Probably. So anything else that you could recommend for us?
So I just want to say, again, if you're looking to get a home, start saving your paperwork because you will have to provide it. Don't throw it out. A lot of people get electronic pay stubs. Make sure you know how to print those pay stubs or email them. Same thing with your bank statements. Everybody's paperless now. There's always a way to send them to your loan officer, and we do have a secure portal where you can get that information to us where it's protected.
I actually do that because being in the business that we're in, I have to have everything for my taxes. So anything that I get electronically, I turn it into a PDF, and I made a little window in my email that says important stuff. And I just stuff it in there.
Kind of put it in there. But
important stuff 2024, important stuff 2023. Yeah. So if anyone ever breaks in, they know exactly where to go.
There you go. Oh my gosh, and you told everybody that on camera.
Oh, sorry.
So save your paperwork. Ask your loan officer questions. Our job is to educate you. Our job is to paint that picture for the underwriter, and we would never, I would hope most of us, I know me, would never let you get so far as and then not be able to close.
Wonderful. Thank you so much for coming today and sharing all this information with our clients.
Well, thanks for having me.
If they need to get a hold of you, right underneath the video, they're going to be able to see all of your contact information.
Perfect. Great.
And thank you again. Thank you, guys.
Bye.